Assalamualaikum and hello everyone. We are from Group 5 and we would like to present the financial analysis from two companies that we had chosen. My name is Nur Amira Alia binti Safabatyar and my matrix number is 297349. Now, ladies and gentlemen, today I'm thrilled to present an overview of two distinct yet equally impressive companies, PBB Group Berhad and BKAF Group Berhad. The first one is PBB Group Berhad. PBB, founded in 1968 and based in Kuala Lumpur, Malaysia, is a well-known investment holding and property investment firm that is publicly traded on the main market of Bursa Malaysia. PBB has expanded into a multinational corporation with a substantial presence in several countries such as China, Vietnam, Indonesia, Thailand, and Singapore. The corporation works in 5 primary business divisions, namely property, investment and other operations, grains and agribusiness, consumer products and film exhibition and distribution. PBB is involved in the ownership and management of multiple retail and commercial assets such as Cheras Leisure Mall, Cheras Plaza, Megarise Mall, New World Park and the Waterways Arcade. In addition, the corporation employs strategic management techniques to oversee a wide range of investment in its investment and other operations segment. PBB has significantly contributed to the grains and agribusiness industry through many endeavors, including the establishment of flour and animal feed mills, grains trading, and livestock husbandry. The consumer products section encompasses activities such as food production, bakery operations, and the sale of edible oils. Within the film exhibition and distribution sector, PBB subsidiary Golden Screen Cinema Syndrome Berhad is recognized as the foremost movie exhibitor in Malaysia. On the other hand, BKAF Group Berhad, established in 1999, is a corporation that developed with a clear vision for a long-lasting future. BKAF first operated as a distributor of surge protection devices but quickly transitioned into a specialized supplier of earthing and lightning protection (ELP) devices within a year. The company is comprised of 3 primary divisions: ELP, Solar Photovoltaic PV, and 3D. BKAF's ELP section, which holds a CIDB G7 license, specializes in providing advanced earthing and lightning protection system for a range of applications. The Solar PV business, founded in 2010, specializes in the development, distribution, and implementation of solar PV systems, thereby promoting a sustainable energy future. The Trading Division, which has been in operation since 2008, is responsible for the prosumer and distribution of superior products for solar photovoltaic PV and energy storage systems. Both organizations exhibit remarkable profiles, showcasing their adaptability and impact in their respective sectors.
Assalamualaikum and hi, my name is Amira Sofia and my matrix number is 297436. Now I will continue our presentation with liquidity ratios. Liquidity ratios measure a company's ability to meet its immediate obligation with liquid assets. The current ratio, calculated as current assets divided by current liabilities, indicates a company's capacity to cover short-term debts. A ratio above 1 suggests a favorable position. The quick ratio goes further by excluding inventory from current assets. A quick ratio above 1 signifies a company's ability to meet obligations without relying on inventory sales.
Assalamualaikum and hi, my name is Nur Shafiqa bint Azmi and my matrix number is 297375. Now, I will present to you the current ratio for the first company, which is PBB Group Berhad. So, to calculate the current ratio, we need to divide the current assets to current liabilities. In this case, the company's current assets and current liabilities are RM3874773 and RM1791571. So, the current ratio for this company is 2.16 to 1. So, meaning that for every RM1 of current liabilities, the company has RM2.16 of current assets to repay its RM1 liabilities. This implies that PBB Group Berhad can repay its current liabilities when they are due. Now, I will present to you the quick ratio for PBB Group Berhad. To calculate the quick ratio, we need to divide the quick assets to the current liabilities. The company's quick assets and current liabilities are RM2733552 and RM1791571. So, the quick ratio for this company is 1.53 to 1, which means for every RM1 of current liabilities, PBB Group owns a current asset that can be liquidated in a short term of RM1.53.
In assessing the financial health of our second company, BKAF Group, we examine the current ratio, a key liquidity metric. As of the latest financial data, the company's current assets amount to 154,491,285 ringgit, while current liabilities stand at 55,846,940. Calculating the current ratio by dividing current assets by current liabilities yields a value of 2.77. This implies that for every 1 ringgit of current liabilities, Pekat Group possesses 2.77 ringgit in current assets. A current ratio of 2.77 to 1 signifies a healthy liquidity position, indicating the company's ability to cover its short-term obligation comfortably. This favorable ratio suggests that Pekat Group is well positioned to meet its immediate financial commitments, contributing to overall financial stability. Examining Pekat Group's financial position through the lens of liquidity, liquid ratio provides a focused assessment, with current assets excluding inventory at 85,585,652 ringgit and current liabilities at 55,846,940 ringgit. The liquid ratio is calculated as 1.53. This implies that for every 1 ringgit of current liabilities, Pekat Group possesses 1 ringgit and 53 cents in quick assets. The liquid ratio of 1.53 to 1 suggests that the company can fulfill its short-term obligation without relying on the sale of inventory, indicating a reasonable level of liquidity. Pekat Group's ability to cover immediate liabilities with readily available assets contributes to its financial robustness and underscores prudent management of liquidity, fostering confidence among stakeholders.
Now, I will explain about the activity ratio. Activity ratios, sometimes referred to as efficiency ratios, are financial measurements used in accounting to assess how well a business uses its resources to produce income or sales. So these ratios shed light on how well a company uses its resources and how productively and efficiently it operates. So basically, activity ratios have two types, which are total asset turnover and account receivable turnover. So firstly, a ratio called total asset turnover evaluates how well a company uses its assets to produce revenue. It is calculated by dividing total revenue by total assets of the business. The ratio demonstrates how well a company makes money out of its assets. A high ratio could indicate that the company is using its resources effectively and efficiently. Since total asset turnover evaluates how well companies do in comparison, it is especially useful when comparing companies in the same industry. It is important to keep in mind that depending on the type of assets used to generate revenue, the ratios can vary among industries. Next, a ratio called account receivable turnover measures how quickly a company can get its money back from credit sales. It is calculated by dividing the total credit sales by the average number of accounts receivable during a specified time. The ratio shows the effectiveness of an organization's accounts receivable management, and a high ratio of accounts receivable turnover indicates that the company has a strong credit collection system and can quickly collect money from its customers. And a low ratio of accounts receivable turnover may indicate that the company is experiencing difficulties managing its accounts receivable and may be experiencing cash flow issues. To calculate total asset turnover, we need to divide net sales to average total assets. BBB Group Berhad's net sales and average total assets are both RM6151181 and
RM1085954950.
So the total asset turnover is 5.66 times. This means BBB Group Berhad generate an equal number of sales to its total assets, or 5.66 times. This demonstrates how well the business makes use of its resources to drive sales. Now, I will explain about BBB Group Berhad's account receivable turnover. To calculate account receivable turnover, we need to divide net sales to average trade receivable. The net sales and average trade receivable for this company are both RM6151181 and 10952330.50. So the account receivable turnover for BBB Group Berhad is 5.62 times, and this ratio means on average, BBB Group collected its accounts receivable 5.62 times during the period. This shows that BBB Group efficiently handles its trade receivable and collects payment from their customer in a brief time.
Analyzing Pekat Group's activity efficiency, the total asset turnover provides insight into how effectively the company utilizes its asset to generate revenue. With total asset value at 195,054,007 ringgit and total revenue amounting to 179,226,348 ringgit, the total asset turnover is calculated as 0.92 times. This ratio indicates that Pekat Group generates approximately 92 cents in revenue for every 1 ringgit of total assets. While the ratio is less than 1, suggesting a moderate level of asset utilization, it is crucial to consider industry benchmarks and historical trends for a comprehensive evaluation. The strategic analysis of the total asset turnover aids stakeholders in understanding the company's efficiency in deploying its assets to drive revenue, contributing to informed decision-making and overall financial performance. Examining Pekat Group's efficiency in managing its account receivable, the account receivable turnover ratio sheds light on the company's ability to collect funds from customer promptly. Calculated by dividing total revenue 179,226,348 by average account receivable 37,488,611 the account receivable turnover is determined to be 4.78 times. This implies that on average, Pekat Group collects outstanding receivable approximately 4.78 times within a given period. A higher turnover ratio indicates a more efficient collection process, highlighting the company's effectiveness in managing credit terms and converting receivable into cash. Stakeholders can use this ratio to assess Pekat Group's liquidity, credit policies, and overall financial health, contributing to a comprehensive evaluation of the company's operational effectiveness.
Profitability ratio is integral to financial analysis, gauge a company's efficiency in generating profits and returns for shareholders. The profit margin on sales calculated as net profit divided by total revenue multiplied by 100 measures the percentage of profit derived from sales, indicating cost management effectiveness. Simultaneously, return on common shareholders' equity determined by dividing net income by common shareholders' equity and multiplying by 100 assesses the return earned on equity investment. These ratios play a pivotal role for investors, analysts, and management, offering insights into financial performance, efficiency, and shareholder value creation. Through a real-world example, we will interpret these ratios to evaluate a company's profitability and equity utilization. In conclusion, profitability ratios provide a comprehensive view of a company's financial health, aiding informed decision-making.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Salim Faris bin Shukar Rahim and my matrix number is 296846. Today I'm going to present about the profitability ratio of the PBB Group Berhad. The first one is profit margin on sales. The profit margin on sales formula is net income divided by net sales. After dividing it, the numbers that we got is 33.67%, which means PBB Group Berhad earns around 34% of every 1 ringgit of their revenue. Second one is return on common shareholders' equity. The formula is net income minus it by preferred dividends and divided by average shareholders' equity. And the amount that we get is RM0.07, which means the shareholders gets RM0.07 for the every 1 ringgit that they invested in PBB Group Berhad.
Good day everyone, my name is Neil Shukai and my metric number is 299934 and today I would like to present about profit margin on sales about the PKAF Group Berhad. The company profit margins on sales stand at 5.59%, signify that it's earning 0.06 cents in the profit for every Ringgit Malaysia of sales revenue. To put it differently, the company's profit constitutes 5.59% of its total sales income. This slide is talking about the return on the common shareholder equity about the PKAF Group Berhad. The return on the investment for the common shareholder average at RM0.08 for every RM1 investor in the company.
Leverage ratios provide valuable insights into a company's financial structure, assessing the extent to which it relies on debt for financing. The debt-to-asset ratio, calculated as total debt divided by total assets, reveals the proportion of assets financed by debt. A higher ratio implies a greater reliance on debt, signaling potential financial risk. The debt-to-equity ratio, computed as total debt divided by total equity, assesses the balance between debt and equity in the capital structure. A higher debt-to-equity ratio indicates increased financial leverage, suggesting a greater dependence on debt for operation.
Alright, right now I'm going to present about the leverage ratio of the PBB Group Berhad. First one is debt-to-asset ratio. The formula is total liability divided by total asset, and the amount that we get after dividing it is RM0.08, which indicates that around 8% of the company's total assets are funded by the debt. The second one is debt-to-equity ratio, and the formula is total debt divided by total shareholders' equity. And after we dividing it, the amount that we get is RM0.09, which means for the every 1 ringgit of the equity, company has RM0.09, which means 9 cents of the debt.
The company debits accounts for 31.72% for its total assets, indicating the proportions of financings derived from borrowed capitals in the relations to the overall asset base. The company's debt to equity ratio for 0.46 indicate that for every RM in equity, the company has RM 0.46 in debt. This implies that the company relies more on debt financing than equity, making debt the primary source for funding in its capital structure.
Assalamualaikum and good evening. My name is Hafizan bin Muhammad Niza Jonas. Metric number 297540. Comparison for liquidity ratio. For current ratio, Pekat Group have 2.77 equal to 1 while 2.16 equal to 1 for PBB Group Berhad. The current ratio indicates how well a business can meet its short-term obligation with its short-term financial obligation. In this context, Pekat Group appears to have a more favorable liquidity ratio due to its higher current ratio. Next, for the quick ratio, which separates inventory from current asset, provide a more conservative measure and is identifiable for both company at 1.53 equal to 1. This shows that both PBB Group Berhad and Pekat Group possess the ability to cover their short-term liability without relying on the sale of inventory. Next, activity ratio. Total asset turnover, PBB Group Berhad impressively at 5.66 times. Pekat Group, on the other hand, trail behind with a total asset turnover of 0.92 times, signaling a weaker rate asset conversion into income. Shows that PBB Group Berhad had a better ability to generate substantial revenue in relation to its total assets. Moving to account receivable turnover, PBB Group Berhad boasts an account receivable turnover of 5.62 times, which is higher than Pekat Group 4.78 times. In comparison, PBB Group Berhad appears to be able to collect payment from their clients more efficiently. Next, profitability ratio. The profit margin on sales for PBB record a profit margin of 3.57% while Pekat Group outperformed with a higher profit margin of 5.59%. Consequently, Pekat Group had more effective conversion of sale into profit. Next, for return on common shareholders' equity, Pekat Group record a slightly higher at 8% while 7% for PBB Group. This indicates that Pekat Group offer their shareholder a slightly higher return. Next, leverage ratio. For debt to asset ratio, PBB Group Berhad show that only 8% of its total assets are financed through debt. In contrast, Pekat Group has a significant higher debt to assets ratio of 0.32, signifying that 32% of its total assets are funded by the debt. In comparison, PBB Group Berhad relies less on borrow capital to maintain its asset base. Next, for debt to equity ratio, with only 9% of its equity being attributed to debt, PBB Group Berhad has a relatively conservative approach, as evidenced by its 0.09 debt to equity ratio. Pekat Group, on the other hand, had significantly higher debt to equity for ratio of 0.46. This shows that Pekat Group has a higher level of financial risk. Lastly, suggestion for both companies to improve their performance. The first company is PBB Group. The first point is fine-tuning receivable management for faster cash conversion. The company could explore advanced receivable management system, incentivizing early payments or using creative ideas to shorten payment cycles. This would strengthen the company's financial resilience by helping to sustain a robust cash flow. Next, holistic financial analytics for informed decision making. PBB Group Berhad should complement ratio analysis with a broader financial perspective in order to ensure a comprehensive understanding on its financial well-being. This involves evaluating debt level, pattern in cash flow, and industry-specific benchmark. For Pekat Group, The suggestion is innovative cash flow strategies for accelerate growth. Future financial trends can be predicted by using predictive analytics and dynamic cash flow forecasting technologies. This proactive approach enables the company to identify potential cash flow gaps and take preemptive measures. Lastly, diversification and risk mitigation. Consider exploring new market, product or service that align with the company appetite. In addition to increased revenue sources, diversification reduces the danger brought on by dependence on a particular product or market.